Glyn, on the face of it, November was a reasonably quiet month for market, but actually there was quite a fair amount of volatility. What was going on underneath the surface?
Well, yeah, it was actually quite a good month for markets again. Equity markets up pretty much across the board. MSCI World Index, the broad barometer of developed markets, up 1.3%. Emerging markets up about the same in the month. As you rightly say, a degree of volatility. A couple of elections, of course, that no doubt we'll touch upon. We mentioned those in our previous podcast. But I think really the standout feature was unusually Japan, which had a very strong month and is beginning to catch up on its underperformance earlier in the year against other developed markets. So in the month of November, Japan was up over 5%. By far and away the best performing stock market in the period. So an interesting month actually.
Well, Japan's always a bit of an enigma. What's the news there?
Well, there was an interesting contrast. First of all, they announced that GDP contracted by about 3.5% in the third quarter of the year. That was a little bit worse than people thought. I think people were expecting some contraction in GDP, but the really significant news was the decision to call an early general election. And the government has been really struggling for quite some time. The expectation is that the LDP party headed by Abe will actually win the election. And the key thing is that Abe is on record as saying that he would expect the Bank of Japan to engage much more monetary easing. He's talking about unlimited amounts of monetary easing until inflation reaches a level of 3%, as opposed to the Bank of Japan's current target of 1%. And in addition to that, he has said in the past that he would be prepared to have greater political interference in the workings of the Bank of Japan, to have greater political control over the Bank of Japan. So all of those things combined indicated to the market that here was a guy who was very likely to win the election and was intent on really serious monetary stimulus to the Japanese economy. So I think that was the key thing. As well as that, that helps in pushing the yen down by about 3% in the month. So, as we know, the Japanese stock market is quite sensitive to the performance of the Japanese yen, and typically weakness of the yen helps the stock market, which is so export dependent. A combination of those factors, I think, was seen as very positive for Japan. And then finally, towards the end of the month, we saw the government announcing an 880 billion yen further stimulus package, which they think will add about 0.2% of GDP next year. So there are some signs possibly that Japan is finally beginning to sort of take serious action to come out of its sort of decade-long deflationary sort of zero growth, effectively.
You mentioned elections. November was noteworthy for a number of different political changes, or
yes,
things staying the same. In fact,
yes. Yeah.
Why don't we start talking with the US?
Well, the US, as we predicted a month ago, it was won by Obama. The talk now has very quickly moved to the fiscal cliff, and the fiscal cliff is certainly a feature. You mentioned volatility in markets earlier on, and of course the markets have been volatile and almost sort of swinging on a daily basis, depending on what noises are coming out of the negotiations in the US between Obama and the Republicans on how they're going to handle this issue of fiscal cliff. And just as a reminder, what it means is that there are automatic tax increases and spending cuts which come in on January the 2nd next year, unless there's legislation to change that. And those automatic changes would take about $600 billion, or about 4% out of the economy. Now that's not going to happen, but these negotiations are going right to the line. It's beginning to look as if there's going to be some compromise, and when we hear that, of course, markets rally on the back of it. I'm sure we'll get, over the course of the next couple of weeks between now and the year end, lots of noise on this, but ultimately there will be some resolution. But that's a key factor to look out for in the rest of December. The other big election, of course, was the Chinese election. We knew exactly who was going to win that one. And it again, I don't think there's sort of dramatic news immediately out of that, but it looks as if the new administration is going to be more inclined to introduce capital market reforms, greater liberalisation of the currency and interest rates, which I think will be helpful in the longer term. And there's been some suggestions that there will now, once the election's out of the way, there'll be some fiscal stimulus to get the economy moving along a little bit. And interestingly, as those sort of rumours have been coming out of China, the actual numbers from the economy have begun to pick up a little bit. So it's looking as if the Chinese economy has stabilised or beginning to tick up a little bit after that sort of quite significant weakness in the middle of the year.
Talking of weakness, Eurozone GDP not so impressive?
No, Eurozone GDP in the third quarter contracted by about 0.1%. The numbers coming out of Europe, not just peripheral Europe, but more importantly, Germany and France suggest a further slowdown in the fourth quarter. And taking the numbers that we've seen so far for this quarter, it's beginning to look as if Eurozone GDP will contract by about 0.5% in the December quarter. And the comments coming from the administration and authorities and the ECB all suggest that it's going to remain pretty difficult in the Eurozone through the first half of the year before beginning to see a pickup in the second half of the year. So, yeah, a tough time, but I don't think any big surprises there. And interestingly, the European stock market, second best performer in the world after Japan in the month, up by nearly 3%.
Okay. Staying with Europe, Greece has dominated headlines a lot recently. It looks like we've made some progress there in terms of the deal.
There has definitely been some progress, and I think that was probably a more important reason for the stock market rallying quite well, performing well in November. The troika that's been negotiating with Greece, the ECB, the European authorities, the IMF, have agreed now to a rescheduling of maturity on certain debt, to a cut in interest rates, and various other technical measures, as well as an extension of the time period for Greece to meet its 120% debt to GDP target. And that follows the Greek government signing through further tax increases, an increase in the retirement age, and spending cuts. So there's now been agreement on all of those. Probably rather sooner perhaps than the market thought. That was certainly seen as a positive factor and has definitely bought more time for Greece and the periphery generally. So yeah, I think that was quite a sort of a positive factor for the European markets.
Okay, and overall, you've referred to equity markets already. Any other notable performances last month?
Well, we saw bond markets, government bond markets performing reasonably well, not as well as equities, but actually treasuries returned about just over 0.5% in the month. Credit had another good month, high yield up by nearly 1% in the US. So it was generally a positive period for sort of risk assets. But I wouldn't say any sort of standout features among those. Commodities generally fairly flattish. Gold did very little in the month. So it was really a month that I think was dominated by the equity markets.
Great. Thanks, Glyn.